Hello guys, welcome to a Trading Parrot. People are seeing the 13.4 billion monthly options expiring, clearing resistance. That is the bullish view out there. In my video on Friday, I mentioned that the max pain was at around 100k, and that was a motivation for price to go higher. Since that max pain now is gone and the hedging, the funds and all of that is gone as well, in the 36-hour post Friday, we should see less incentive from this end, in my opinion, to push the price into 100k. And you know that my motivation is to go there, so I'm being very honest with this reading, which people are seeing it as something bullish. 7 out of 10. Personally, I don't see it as something bullish. I see it as an opportunity for the price to take an actual dip. Federal Reserve cut odds surge to 87% for December. That's a tradable event that continues to push into higher expectations, very close to the 90%. And that potentially can bring some additional upside on Monday for general markets, and definitely is going to bring also some push for the price into the upside. And institutional deep buying confirmed. We have 500 Bitcoin and 16,000 Ethereum, around 94 million in total, coming from BlackRock and ARK Invest. I don't necessarily see this as deep buying confirmed massive. I will say it's a very humble buying at the moment. It doesn't outpace all the selling that we have had in the past month. We're going to look into the 4-hour time frame, daily and weekly, and see how much progress we have done this week. If you have missed the videos on the week, or if you really want to know where we are sitting at the moment before we land on Monday, this is the best video that you can watch. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. 1,000 likes over the weekend would be fantastic. And yes, guys, the links to the Black Friday, some of them have already finished, but many of them are still on. So have a look at the first link pinned in the description. If you're looking for an exchange to trade, Bluffin is currently offering a new opportunity raise to VIP4, deposit and trade to win up to $10,000. You can use the link in the description to be part of this event. And yeah, many people are referring to this particular timing in here, 2018, October, November, we're in the red, and people are referring to this red in here, 5%, and then the continuation into January in 2019. That is part of the bear market, and they are kind of bringing in that as a, well, are we gonna get a red December as well? In my opinion, the Bitcoin monthly returns, the seasonality, haven't really been playing out in a way with enough consistency so that we can really use them. Indeed, everything has been upside down. September was expected to be in the red and it was in the green. October, November were supposed to be the most bullish period in the year. Now, December is expected now to be in the red just because people say that in here was in the red. But every single pattern, I will say 60% of the past patterns based on monthly returns have been doing precisely the opposite. Unfortunately, they are not all breaking, so there are some of them that they are still playing out. Therefore, we cannot say let's play the anti-pattern. On CME, well, we have some issues on Friday while silver was pumping and people were speculating that CME went down just because of that. Well, there was an outage, apparently, that's the official information. And during the middle of Friday, there was a gap here because apparently the price wasn't updating. So you can see that at 1 p.m. UK time on Friday, there was a formation of a gap and price went all the way to 93,700 on CME. On Binance, it went to precisely 93 and it came back to close the gap form in the middle of Friday. So that's crazy. Now the price ended up closing at 91,100 on Binance on Friday, and that is the price that we have at the moment pinned for potentially producing any sort of gap up or gap down relative to that. Guys, we have done a massive update to the Telegram charts. We have included new charts in the platform. You can join my Telegram channel using the link in the description. And remember that all November we have a sale, so if you really like using these charts, consider supporting the channel by getting a year, 3 months or 6 months at a 50% discount. The aggregated open interest, we took a picture on Friday and it pinched perfectly 31 billion. From there, it's been just roughly seen a small rejection, not yet a lower low. That is the big event, or a reclaim will be a bullish event at the same time. All my eyes are on it. Well, on the 4 hour, we are seeing over the weekend something that I wouldn't have liked to see. I already expressed that after the breakout on the 4 hour to the upside over 65, my most bullish support was to hold 64. But then we came into 61 and we put the same equal high at 68. Up until that point, I was satisfied with the lower performance as expected, but once we broke below 58.94, now we have to say that was a breakdown on the 4 hour. Now, if we push this line like this, you will notice that we had a breakdown before. So this is not the first fake out that we produce. The first one was this, we formed a double bottom. I was not expecting that to hold, and we went completely against the force of gravity in here, not just because we went for a revenge rally into 61, because actually we pushed into a full breakout there. So that was completely noise for what we are seeing at the moment, right? If we put the line like that and we say that is the pivot, then we got another breakdown. And if price now wants to confirm that this is not a breakdown, well, again, same story. We need to form a double bottom until around 58, 59, and then break out and push and hold above 69 on the RSI 4 hour. That's the only way that we can clear out all that noise that is producing. Most of the noise is coming from the weekend, basically because there is low volume, there is Thanksgiving and people are not trading. So for the breakout of the double bottom that we could be seeing potentially on Sunday, we need to close above 91,300. And that is the level where we put the close on CME. So going into that is something that we could be doing. Remember, we are trading below the price of the close of CME. That makes it so far a gap up, a bullish one, a one that can attract the price to go higher. And if we go that high, at that point, we are facing the neckline of the breakout of that incoming potential double bottom of the 4 hour, similar to the one that we have in here, and eventually push. And if we push, we need to qualify that push, how good it is. If it goes beyond 69, then I will say that it will have put a higher high, and therefore everything continue just to be the usual noise of the 4 hour time frame. If it doesn't get to 69, if it doesn't manage to put a close above 69, well, that was a breakdown, and the most likely scenario of a breakdown is always to the downside. So I'm going to leave that 59 there, and I'm going to place a 69 somewhere in here to remind me next time I do a video or when I look at the charts if that is going to break out above that level. So just so you know, that 69 at the moment is 93,455. Looking at the price action, you can see that that coincides with the previous neckline, right? So that was support twice and resistance twice as well. So it's right where it is the next resistance. At the moment, the battle that you're seeing on the 4 hour is very easy to see if you look at the volume profile, that we are battling against the point of control. All this trading range has the massive volume right there at 91,400. That's where we have also a roundish, the CME gap. So basically, over the weekend, we need to flip a coin. Are we above that? Are we below that? If we are above it, it's bullish. If we are below it, it's bearish. I don't know if I say it right, but you get the point. On the daily, things do not look bad at all. All the progress that we have done, all the signals are immaculate. Yeah, we got a rejection to re-enter there, but we are doing precisely what the daily needs to be doing, which is stick around and insist, right? Persistence in a time frame, sticking around very close to the resistance means that the bulls are still kind of battling. Do not take a first rejection if it's a small, if it's a humble one, as well, this is not going to happen. That's the point. And in here, the breakout on the RSI doesn't really show anything dramatically bad. We literally are in pretty much the most bullish position that we can be, right? We broke out 2 days to the upside, taking a breather over the weekend, at least up until now. I'm not saying in the rest of the weekend this cannot break, but by judging the charts at this minute on Saturday night, that is what it's saying. And let's summarize what we have achieved over the week, because it's not minor. We reclaimed the global support. That is something that we did last time in August in 2023. It's a long time since we don't pinch below the global support on the daily. We reclaim it straight away, and we went for a breakout that happened on Friday. Then we knew Thanksgiving, also 7 years of Thanksgiving with downside, and this one did an upside. So it's kind of flipping what we have seen so far to the downside and trying to do something positive. We put a bull cross confirmed by Friday. We put 1, 2, 3 dots of the momentum peaking to the downside. And we reclaim for the first time a support on the CPR in this month. By Monday, we're going to get new levels of CPR, and we need to be monitoring them. I speculate that they're going to be around 100K, and 100K at the moment is the line in the sand for 1,000 indicators to confirm whether that rally, if we get there, is going to be just a dead cat bounce, or if it's going to be a reclaim in a V recovery and potentially seeing new all-time highs after that. We'll cover what that means. I'm going to summarize what I have said potentially 5 times already this week. Leverage Squeeze is saying this is an area to sell. There is just too many longs. It's a low quality signal, but it has played out all the way from the all-time high. Every time that we get in these areas, well, it gets sold out. So if this time we manage to survive this low quality signal, we could see an effect like this, where there is just a small push down, 3, 4, 5% down, and then a massive spike back up once the loads reload. Yep, last week and this week we've been trading on the weekly below the support of the whole cycle. So we've been lower than ever, and we've been using these fractals to understand how high can we get just relative on the past performance of the previous dead cat bounce before bear market. Everybody has been doing that. We were the first ones, I'm sure, because when we were doing this, everybody was saying how high Bitcoin was going to go, 200K, 300K, and we were focusing on this. 3 months after, people are just getting started to talk and make the comparisons against this. So stop watching those videos, stop watching those channels, because they are giving you information that we already knew 3 months before. Don't believe me? Scroll through my videos and you're gonna find all the videos, including some of them that I did TA and I couldn't believe what I was seeing. I was dubious, but there's plenty of them, as you can see in here, particularly the one about the ratios. That one gives me the chills. So let's get serious and let's look at the weekly time frame in here. We are right there at weekly resistance with what could turn into a weekly breakout on the RSI. The stochastic RSI is ready there for the picture, right? So if we close the weekend just like this or with a higher price, we get a bullish cross. That should help with the breakout of the RSI, and it should help with reducing the histogram and potentially pushing higher on the MACD as well. So breaking below 44 on the RSI is one checkbox for bear market. Not being able to reclaim 44 is really ugly if we cannot. Ideally, we want to use this breakout not just to break out, but also to cross 44, which is slightly higher than the area of the breakout. Then the fractals from 2021 are giving us a range between 96 to 100,000 for the maximum that we can do if we are going to do a dead cat bounce. And that is because in here what we did is an extension of 0382, which if we project from this bottom to this top, similar to this bottom to this top, then we get a price of 100K. More patterns you want? Well, the 50 weekly MA, the white line in there, rejection there, currently is trading at 102. The bull market support band, we stick our nose slightly above that, but still it was trading at 45 and we went to 48. At the moment, this one is actually higher than the 50 weekly. But this zone there is definitely the crossroads for Bitcoin to say bear market, or are we gonna be able to squeeze that lemon with a few extra drops? I got another weekly chart that has some reminiscence of number 3 in here, in the momentum. Recuerda, I'm speaking Spanish now. Remember that this falling wedge on the momentum, we're precisely at the point where we were in pretty much the bottom of the bear market in terms of momentum, not in terms of price. Yeah, the momentum is below the falling wedge, reclaims, and that is kind of the end of the bear market, right? So when you pinch 17 and then you pinch 15, that range in here is kind of where we are building a base to form what it could be considered early bull market. And in this area in here, we're kind of doing that, right? So price is very high relative to the beginning, right? From 15, we are still trading at around 90K. That is crazy because in here we were trading at 17 in relative to 69. That is a massive drop. So there is a chance that from here we could be seeing some sort of rally into number 4, which is what we did there. But I really don't know what's going to be the effect of that. Is that number 4 going to come with a new all-time high? In here, number 2 came with an all-time high in an area of bearish divergences. Number 3 and 4 were lower lows. In here, number 2 was a higher high. Number 3 was a higher high. Will 4 still be a higher high? I don't know. The probabilities are definitely not in our favor, but anything is possible. Futures open interest percent change oscillator has exit the area where we are supposed to be looking for longs. Now it's fastly moving into the 0%, and that is because it's catching up with what the price has done when going into 93K. That brought a lot of longs and definitely is no longer an area where you are pretty much the only one entering. Short-term holder realized price now is at around 104.4, so that is a number that you have to write down with a pen in your forehead and walk around the city with that number to remind yourself every time you see the mirror that that is the area where the short-term holders are thinking to unload once they are back into break even. We have had some positive moves on the spot ETFs on Bitcoin, but nothing that can really erase the damage from before. That's why whenever I hear that BlackRock is back to accumulation, heavy accumulation, what the hell do they mean? Because we just had a 900, and when you see a 20 and a 71, you're saying that we are confirming that there is heavy accumulation. That sounds like a manipulation. Let's call it the way it is. 28, now we are in fear. Finally, we exit pretty much a full week of extreme fear. That by itself, it's a bullish signal, but careful, because when you enter a bear market as well, in all this area in here, we enter areas of extreme fear. In May, in June, in July, all of that was extreme fear. There were some bounces all around the way. You can take longs in that area, but you have to be extremely careful and, I would say, advanced trader to get out when you should. All right, Trading Different has a new tool now. We can see the cumulative, which is something that we can already see in other platforms, like, for example, on CoinGlass. And we're going to use it in our favor at this point. I'm going to show you in here the cumulative. If we go into 76, the cumulative is as high as if we went into 100K. But here's the catch. To get into 100K, that is a move of 10K, whereas going into 76 is a move of 14K. So pretty much market maker, if they have the opportunity to flip a coin, which one they want, the one that takes less energy at the moment is to go into 100K, just saying. Now, obviously, if general markets are puking on Monday or something breaks, then they have to follow the trend and they have to take advantage of whatever they can. Now, notice that also is more attractive to go to the upside when it comes to liquidation pools, because in the way we have this one that ends at 97, not to mention that at that point we could be fulfilling that idea that in 2021 we did this move into the dead cat bounce and then we get into 96, 97, 98, who knows, and that could reject, and then we don't even touch 100K ever again until we are back in another bull cycle. Loads of things to consider, but there is a good incentive to just end there at 95, 96 from the point of view of liquidity pools in short term. If market maker has some things to do in the upside, then it can get into 100K and it will take as much as this red area there. Now, if something breaks in the markets, they are not going to have any trouble just collecting the 76. Why? Because all of this move here can still turn into a dead cat bounce. How do I know? I don't know really, but I'm talking about probabilities, and probabilities say that if you haven't yet achieved the golden pocket in a bounce up, if you get a rejection before the golden pocket, you still haven't proved that you can continue into higher highs. So technically this push into 93 could become heavy resistance. We could be using this area in here of the rejection of the falling wedge and push us into a new low that very easily can be sent into mid 70s, just the way it happened in this area in here, where we couldn't hold it as support, we tested as resistance, and we were sent where? To 74K. So history could rhyme with that easily, unless we reclaim 92, 93. Daily signs, momentum, breakouts are saying that we are on our way to do that, but we need to wait and see. No one knows what's going to happen with the price really. Interesting to note that these two triangles, the one below broke down to the downside and it was a fake out, ended up breaking out to the upside. And then we formed another equivalent triangle, we broke out to the upside, and this time that was the fake out and we ended up breaking to the downside. Now we're just going sideways, so we can even ignore this triangle and just leave it like this and see what happens next. On long-term liquidity, we continue to focus on all these numbers, but now that we have the cumulative, this is going to give us a completely different perspective. Yes, you can use it in here, but the maximum is 30 days. Do not underestimate the power of having a cumulative on a long term. And at the moment, you can see how liquidity increases into 125 and it goes very, very high if we get into 140. But if you place a vertical line like that, that liquidity that peaks at 141, you can get the same by dragging the price into 57K. So not because you see a lot of liquidity here, you need to do the math and think, well, that's the only way to get a lot of liquidity. You can get the same liquidity or liquidations if you go now into 141 or if you go into 57K. It's pretty cool to have all of this. Now, if we close this into this area there, liquidating up until 67 is equivalent to going to 133K. Let's go into the short-term liquidity. 30 days, we currently have a liquidation level at 92. That's the largest across the range, followed by the liquidation of 97.8. Below the price, everything is very sharp, is very flat. Looking at Market Monkey Terminal, we have a ton of resistance over the weekend. By Monday, everything is going to shift. Do not take a mental picture of this and think that on Monday is going to be the same, because that is not the case. We have resistance at 91 at the moment with 1K, 700 at 92, 134 at 93.5, and then two more levels of 1K at 97 and 99. Below the price, everything is concentrated on holding the 90K. Whether they're going to achieve that with this or not, I don't know, but I'm showing you that there is an ongoing battle at the moment. Looking at fire charts, let's have a look if we can identify the buying wall, if it's still there, if it has decreased, all of that I care. So this is the way it was looking over the week. You can see that it's very shiny in yellow on different levels, but some levels have decreased. The ones that still stand at the same intensity is around 75k with around 50 million. We still have a couple of levels right there, but they are just 14-15 million, holding that level of 83 and 81. Below the price, you can see that there is a vacuum of support. I don't know why this one is showing this. Well, actually, it's correct because right below 90, there is a band holding the price, but it's a very thin layer, and you can see that below everything goes into just 100. We'll look into high block capital to see if that's also the case. But remember, it's pretty much a waste of time to overanalyze on a weekend because there is low volume, number one, and number two, because as soon as future starts moving into Monday with expectations of things going on, everything shifts. Fair value gaps, at the moment, we have a low-hanging fruit in here to hit 87.6 over the weekend. I don't know if we're going to do that, but we are right there sitting in front of this fair value gap. Fair value gaps overlapping 4 hour with daily, that is good alpha as well, which is the case in this area in brown. And you can see that that can slide the price very fast from 90 into 87. And that is because that's what we did in here. We pump from 87 into 90 in almost a single candle. As I say, there was a vacuum in here and we were not able yet to complete the progress into 102. Now, looking at the price action, I would like to see that this forms something like this and then produces a breakout that consumes all the fair value gaps above the price into 105. Of course, I would love to see that now that I'm net long at the moment, a ratio of 2-to-1. So 2 longs versus 1 short. My long has an average of 100k and my short of 121k. We continue to put negative funding rates. The last time was at 4 a.m. today, UK time, UTC. And longs are pushing up, but not very fast. We are far from the 70. The 70 is my preferred area of percentage to start saying that we are gonna hold the price. But hey, the price hasn't come down that much. If the price comes into 87, my expectations or my wish will be that this goes into 70 and beyond and it holds that level. By doing so, we consume the fair value gap, we take it out of the way, and then we go back into the CME gap and the upside. High block capital in here is showing me red across the board. All deviations to 1, 1 to 2, 2 to 5, 5 to 10 are all in the red except for the 10 to 20, but it's all the time changing. There is a very thin order book. There was a post saying that the hash rate is declining at the fastest pace or rates in years. This is coming from Bitcoin Magazine Pro. In here, all I can see is that it's just sitting at a low. And if I look into my charts, the hash rate is just at 1.1 billion. So maybe they took the notice when it was at 880, but I don't see really anything substantial going on with the hash rate. This morning, I published the Crypto Intelligence report on YouTube, Telegram, and Twitter. Make sure that you read it. It's for free. Subscribe to my Patreon for free and you get it in your email as well. This covers many YouTube channels focused on crypto, on trading Bitcoin, and I'm not going to read it all, but you can have fun whenever you have a chance to read it. So let's have a look at the news and let's see what happens in the past 24 hours that is worth mentioning. The CME Group trading halt and aftermath. So they highlight that it's good that despite the fact that CME went down and it affected commodities and lots of different assets that are traded in the Chicago exchange, Bitcoin remained like it didn't care, and that is something positive. The options expired that we already covered. The event passed with barely a reaction, effectively pinning the price to 1993. Let's remember that my hope for Friday expiry event was precisely that, to contain 90k. So we need to count 36 hours, 48 hours at least to understand really what's going to be the aftermath of that. Ideally wait until Monday to really conclude that the options expiring are not having any effect. At the moment, we are in the middle of the battle against 90k, so let's not count victory yet. Silver versus Bitcoin divergence. Silver's aggressive spike to new highs, 56, during the CME outage contrasts sharply with Bitcoin's flat performance. Typically, these assets correlate during fiat debasement trades. Watch for Bitcoin to potentially catch up to the precious metals rally early next week. Fed rate cuts, that's important as well. Institutional flows, well, we covered that too. The S&P posts its best November reversal in history, rising 5% since November 21st low and closes November in green. That is bringing in a new fresh wave of influencers, all of them talking at the same time that in November, close in November or early December, we should be seeing as well some relief. There's even some people saying that the chances of 50 basis points are now back on the table. At least I don't see them in Fed Watch tool, maybe on Polymarket. They are sitting at 1%, so I don't know where they're bringing these things in from. And Coinbase Premium is positive for the first time in a month. This is on the 4-hour. And this is a different chart of the same thing, showing that it's going back into the positive. Probably it's a different time frame. Remember that the High Block Capital membership for free, actually 2 membership advance that I'm giving away for free, are still running on my Twitter. Find this post on my Twitter and make sure you follow all the instructions. I still haven't had the chance to pick the winner, and that buys you more time to get a chance to win 1 full year. Let's wrap it up. It is a quiet weekend. We were expecting to see a quiet weekend, and any sort of signal that we get on the 4-hour can be interpreted as a potential fake out, despite the fact that we have this breakdown, which I have to say always the most likely outcome of a breakdown like this is now to continue to the downside, particularly because we broke out in here, then we fake out that upside into the top of the range, and now we come down. But we are just going sideways and being very attached to that point of control, and we are leaving behind a CME gap that is to the upside that could bring the price by Monday back up into the 92K. If we do that, we are going to complete a double bottom by doing so in this area. All of that assuming that by Sunday we don't dump any further, or if we do it on Sunday and we are above the CME gap, we're going to have to say the opposite. We left a CME gap below us. But at the time I'm recording, that is what I have to tell you. 4-hour has already broke out, and the full technical target was supposed to be 97. If we did that, we complete other bigger patterns that have targets into 107. So one step at a time. Let's see how things progress. Let's see how general markets evolve in futures over the weekend. After a long weekend as well, I should be expecting some volatility next week incoming. And just to conclude, now we are still in the area of the decision. Whether we reclaim this and we continue with the daily breakout, that has a good chance of doing that, but that doesn't stop the 4-hour to misbehave and start making some noise in the way. Now, if the daily breaks down below this support and it fakes out, well, that's a completely different story. But until then, I cannot really tell you that the daily is broken because, I look at it and it looks fine. Guys, I hope you enjoy this video on a Saturday. I hope you enjoy all the TA and news. If you did, hit the like, subscribe, write down any comment down below, and that's definitely gonna help this channel. Now, if you want to do me an additional favor, share this video with a friend that hasn't seen this, particularly people that are interested in trading. That will be fantastic. Thanks so much. I'll see you tomorrow. Bye-bye.